Hey there, amazing viewers! Welcome back to Naresh Flex channel.
It's that time of the year again, tax planning. With the financial year end around the corner, all of us start planning our tax savings now. This will help you figure out how to save on taxes. You need to understand what are the available deductions. Below list will help you plan your tax filing well. House Rent Allowance, HRA. For those who live in a rented house, apartment, can claim HRA to lower tax outgo. HRA is partially or completely exempt from taxes. Leave Travel Allowance, LTA. For travel within India, an employee can avail exemption for the trip under LTA. This exemption is only for the shortest distance on a trip. Only for the trip taken with your spouse, children, and parents, this can be claimed. Hence, on incurring the expenses and submitting the bills to the employers, you can claim this exemption. Employee Contribution to Provident Fund, PF. Provident Fund is a social security initiative where the employer and employee contribute an equal amount every month toward employees' pension and Provident Fund. This is 12% of the basic salary. The government decides the interest rate, which is about 8.65%. Therefore, upon maturity, the returns are exempted from tax. Also, EPF contributions can be claimed for tax exemption under Section 80C of the Income Tax Act. Standard Deduction. Standard Deduction replaced the conveyance allowance and medical allowance. Post the 2023 budget, employees can now claim a flat Rs. 50,000 deduction from the total income, thereby reducing the tax outgo. Taxpayers can claim the deduction under old tax regime as well as new tax regime. Professional tax. Professional tax is a tax levied by the state and is 2,500 rupees. It is deducted by the employer and deposited with the state government. Hence, it is allowed as a deduction from your salary. Exemption of leave encashment. Some employers allow you to carry forward some amount of leave days and allow you to encash them, while others prefer that you finish using them in the same year itself. Exemption under Section 89(1). As per Section 89(1), any salary received in arrears or advance is allowed for tax relief. Exemption from the receipt upon opting for voluntary retirement. As per Section 10(10)(c), any compensation on voluntary retirement or separation is exempted from tax. The exemption is subjected to the prerequisite that the receipts comply with Rule 2BA. Also, the maximum compensation received should not exceed Rs 5 lakhs. Pension received is considered as salary and thus is taxable. Gratuity. Gratuity is a retirement benefit that is provided by an employer if an employee renders 5 years of service in the organization. However, the amount is paid upon retirement or resignation. Donations to political parties. Any donation made to political parties is exempt from tax if it satisfies certain conditions under Section 80GGC. Meal coupons. Some employers provide meal coupons like Sodexo or Zeta to their employees. These aren't taxable up to 2,600 rupees per month. Car leased by employer. If someone is making use of a car lease policy offered by his employer, he can drive a car leased by his employer. Therefore, save tax on car ME since he may not require buying a car. Expenses related to internet or phone. Expenses incurred in using these devices are either prepaid by some employers or can be reimbursed by the employees. Tax benefits can be claimed on these expenses. Medical insurance. A salaried employee can claim a deduction against the medical insurance under Section 80D. Such medical or health insurance must be taken to cover their spouse, dependent children, or parents. You can claim 25,000 rupees against insurance premium paid towards to cover their spouse, dependent children. You can claim another 25,000 rupees against insurance premium paid towards to cover the life of parents. If the parent is a senior citizen, then you can claim 50,000 rupees instead of 25,000 rupees. You can claim a tax deduction for interest on a home loan of up to 200,000 rupees in a financial year under Section 24. The loan must be taken to acquire, construct, repair, renew or reconstruct the property. Moreover, you can claim the tax deduction of principal amount repayment under Section 80C of up to 1.5 lakh rupees. Education loan. You can claim a tax deduction against the interest on education. Such interest must be paid out of your income chargeable to tax for the financial year. The loan must be taken from any financial institution or any approved charitable institution. The education loan can be taken for the individual taxpayer or for any of his relatives. A relative means the spouse and children of that individual or the student for whom the individual is the legal guardian. You can claim the deduction from the previous year in which you start paying the interest on the loan. Starting from the first year of the start of repayment, you can claim for another 7 financial years. In total, you can claim the deduction for up to 8 financial years. However, the deduction is available for 8 financial years or up to the actual complete repayment of the loan, whichever is earlier. Mutual funds. An investment in ELSS equity-linked savings scheme qualifies for a tax deduction. You can claim deduction under Section 80C of up to 1.5 lakh rupees. ELSS is a tax-saving mutual fund that invests more than 65% of its corpus in equities and the rest of the 35% in debt instruments. Deductions. The lower your taxable income, lower is your tax liability. There are multiple provisions by which you can lower your taxable income. For example, under Section 80C, you can save 1.5 lakh rupees annually. 80C investments include FD, equity-linked savings scheme, insurance policies, etc. Also, there are a bunch of other deductions under Section 80 such as 80D, 80E, 80GG, 80U etc. that reduce your tax liability. Every month, the employer deduct a part of your total income tax as tax deducted at source, TDS. This is a significant portion for a salaried employee. Furthermore, the employer provides details of the tax deducted in Form 16, TDS certificate. While filing returns, you are entitled to make the remaining payment.
Thank you for being a part of our community, and we look forward to connecting with you in our future videos. Remember to hit that like button, comment below, share, and subscribe. Stay tuned for more.